What's going on, family? This is not financial advice. Do your own research when it comes to the stocks you choose. That's right, man. We're giving out free game for you. I just have some for you guys that I want to point out, man. So, is investing gambling? So, we're going to pull it all on the floor today. Has someone tell me that they believe strongly that investing in the stock market is gambling. So, we're just going to put it all on the floor and we're going to tell you the difference based on a few facts here. So bear with me. So investing versus gambling. So gambling, as you know, you go to a casino and you put your money on something and you play a game or something and you hope to make money. You're risking capital to make capital. So that's what gambling is. So the risk of capital with hopes of future profit. So the gambling is typically short-lived. So equities, this article brings out, can last a lifetime. So there is a negative expected return to gamblers on average and over the long run. So that's what's expected to happen when you gamble. So short term and long term. So on investing, on the other hand, so typically carries with a positive expected return on average over the long term. So these are based on statistics. These are based on numbers, and over time, the chances of you being profitable double dramatically. So I mentioned investing and gambling. They both involve risk of capital and hope of making capital. Gambling and investing, the key principles is to minimize risk while maximizing reward. And gamblers have fewer ways to mitigate losses than investors do. And we're going to tell you why. So investors have more sources of relevant information than gamblers do. So the odds will be in your favor as an investor and not as a gambler. So we pretty much know what both of these are. So we don't really have to go into depth of defining what these two are. But investing is allocating funds or committing capital to an asset, like stocks, with the expectation of generating an income or a profit. So we have an expected return when we buy stocks and ETFs and things like that. So investors and traders are different. So traders, it's higher risk, of course, and they typically risk 2 to 5% of their capital. So we're not going to get into trading because that's different. But I did want to point out this. This is the most important part I want to point out. So in order to enhance their holdings performance, some investors study trading patterns by interpreting stock charts. So that's the advantage over gambling. Stock market technicians, so people who do this for a living, when I say a living, I mean a living, they try to leverage the charts to glean where the stock is going in the future. So this area of study dedicated to analyzing charts, and it's commonly referred to as technical analysis. So this is something that is real. This is real. Technical analysis is real. So as you know, anything can happen short term, but long term, I just want to give you some numbers. So I want to point this out to you. So the average return of the S&P 500, you can Google it yourself. So dating back from the 1920s to the 1950s. So this is a historic number. So from the 1900s until 2021, the S&P acts as a benchmark of the performance of the U.S. stock market overall. So the historic annualized average return of around 10.5% since 1957. So some have higher, 10.7, 10.9, 10.25 if you look up on different sites. But the average, this is the average since the 1900s, 10%. That's the average. You put your money in the S&P 500, the Standard & Poor's, biggest 500 companies. It's diversified. It's guaranteed 10% year over year. So that's what it's designed to do. It's designed to go up. It's algorithms, numbers, computers. This is real. So this is not something that you put your money in and it goes up, it goes down, it goes up, it goes, and then you sell because you tired of waiting. You're expecting it to go up and it didn't go up in the time frame that you wanted it. This is a long-term game. And not to, emphasize money, but money is what you're going to receive. I mean, it's, you put your money in, you invest in something, you're going to make money off of it. So technical analysis, you have the advantage, you have the numbers, you have the rate of return. So this is what I mean. People who don't understand, they get the idea that it's gambling. But if we don't study something, if we don't know nothing about it, it's time to hit the books, man. It's time to study. So just to give you guys a few numbers, man, and just not go into too depth, but I'll catch you guys on the other side.